What's up, guys? Welcome back to this week's episode of Closed by Mo. My name is Mohammed. I'm hopefully your favorite YouTube host on most things real estate. I'm also a real estate investor and a broker based out in New York City. And because I'm based out of New York City, I figured it was time for me to give you a bit of an analysis over one of my favorite neighborhoods in city, specifically located in the borough of Queens. Yes, I'm talking about Astoria. If New York City is the melting pot of populations from all around the world, Astoria is the melting pot of the melting pot, because that is where you'll find such a healthy mixture of people from all around the world. I'm talking about Greek heritage, Middle Eastern, especially Egyptian heritage, and South Asian, Bengali, Nepali, Indian heritage too. Without further ado, let's jump right into some of the specific multifamily criteria or data that I'm seeing in Astoria. Now, before I jump into the actual meat of the bones of this video and you get to see all that data up hand, before I take the curtain away, there's a couple of quick things you should understand about Astoria. Astoria is made up of mainly 4 specific zip codes: 11102, 03, 05, and 06. I had to look at my notes there just to keep that in mind. Most of the duplexes or the multifamily homes that are currently available on the market are going to be in the most northern part of Astoria. That is zip code 11102. 11106 and other ones, specifically 11106, that really encapsulate like Astoria, but also like Long Island City. That's like where the border is at, but we're not seeing as much inventory there. So most of the data that we're going to see, even though it encapsulates most of Astoria, it's going to be focused toward that 11102 zip code. That is the northernmost part of Astoria. Now, one of the things that I will definitely start off with is the median asking price or the median listing price. Now, you might not be surprised, or you might be surprised by hearing this. The overall trend in the market that we're seeing right now is that maybe buyers and sellers are sort of anticipating to see what's going to happen, where's the market going to be shifting to. People might think it's a little bit unpredictable until I actually tell you what the data is showing us, because ultimately, yes, I'm in the field, I'm in the trenches day in, day out, but the data is what dictates where the overall trajectory is going to be heading. So let's look at the screenshot here that I have right now, which is the median listing price or the median asking price overall. Sure, in 2022 to 2023, we did see a little bit over 1% or a little around 1% of a decline in overall sales price. But if you look at the median asking price or the median listing price that homes are being sold for, specifically two-family homes, what you'll see is that the median sales price has actually been pretty flat year over year, especially since 2023 going to 2024. Now, you might look at this and you might say, ha, Mo, I told you the market is stagnating, there's not enough buyers, sellers, the market is crashing, all that doomsday stuff, whatever you want to say, right? Whatever, sort of feeds the fans or feeds the frenzy to all those news headlines, stoking the fire that the real estate market might crash. But hold that thought, hold your horses, because let's look at what the actual data is telling us. Median asking price and median listing price are great to understand what the current market inventory is like, but what we say in real estate, it doesn't matter until the deal closes, until the property trades hands or that deal has traded. We don't actually know what the raw tangible data is telling us about where that equilibrium price is for the market buyers and market suppliers, aka the property sellers. So if you look at the actual data now, what you'll see might be surprising to what we just saw in terms of median sale price, or median sale price compared to median asking price, median listing price. Sale prices have actually gone up a little over 10% year over year. This is really good news because I think a lot of times people will say, okay, well, the inventory is not there. Maybe that's why there's so much demand and it's creating like a little bit of a squeeze. I completely get that. I see where that perspective is coming from, and I feel like that does apply to a lot of other markets. But in the sub-market of Astoria, if we look at the actual inventory, what the data is telling us, we're actually on track, and you'll see here with the screenshot, we're on track to hit more than 100 new listings or 100 new available properties before the end of the year. This is great news, because if you look at where we were in 2022 and compared to 2024, we've already passed that threshold. So as of late July or early August 2024, we've actually already hit that threshold as of all the properties that we've listed and sold in 2022. So a little over halfway there, and we've already hit the inventory threshold for 2022, which gives me the confidence to say that most likely we will be well over 100 available units or 100 accumulated units or accumulated listings that are for sale or have been sold in Astoria by the end of 2024. This is really good news, right? Because it means that overall market is in the trajectory of getting busier and more active. It means there's more buyers, more sellers in the market, and ultimately, for anyone that is in any spectrum of the purchasing journey, whether it's a first-time buyer or let's say they're a seasoned investor, it just means there's going to be more options available, so there's going to be more inventory overall in the market for you, right? Now, in terms of what we're seeing for, what is actually driving this sort of demand, most of the time with these two-family homes, what I'm personally seeing are people that are either house hacking, and if you're watching this video, you probably know exactly what I'm referring to, or we're seeing investors that are looking to park their funds in an area that they know is going to be strongly appreciating thanks to its close proximity to Manhattan. Because as they say, they're not making more land, and whatever land is available, demand seems to be going up because population seems to keep increasing, which is a good thing, right? Now, let's say, for example, we were to actually look at a duplex property in Astoria for the median listing price of 1.45, 1,450,000. Let's say hypothetically you're a first-time buyer or you're a seasoned investor, whatever it is, and you want to put down 20%. Does this mean you're going to be hitting cash flow? Of course not. You're not going to be hitting cash flow, especially in more parts in New York City than anywhere else. You're not really going to be expecting or should not be expecting cash flow for the first couple of years. However, if you were to sort of do a little bit of a backwards, back of the envelope math here, let's assume anywhere from a 6 to 6.5% mortgage interest rate, with $1,450,000 and 20% down, with your mortgage payment and everything put together, your tenants should be covering around anywhere from 30 to 35% of your overall out-of-pocket expenses. Now, this might not sound like a lot. You might say, hey, you know what? I was expecting my tenants to cover more. 100%, the situation can always be better, but look at it from the perspective of you getting all the tax benefits, depreciation benefits, as well as being able to build equity in a property that's obviously appreciating. Now, if you were to get really into the nitty-gritty and a little bit of a hack to increase your overall cash flow or possibility of cash flow, understand that in Astoria, a lot of the two-family homes, the duplex homes, will have an ADU or an accessory dwelling unit that's built into the basement or the cellar. I'm not telling you that you can legally rent it out. I'm just telling you what I see in the market. A lot of folks, especially people that are, let's say, buying the property for themselves to live in, they're typically the ones that are going to be moving into that dwelling unit, and then they're going to rent out the other two apartments. It might be a 2-bedroom, 1-bath, 3-bedroom, 2-bath, whatever it is, for those other split apartments. But typically, you can get anywhere from $3,200 to $3,900, depending on how many bedrooms you have for those legal units. And then for the ADUs, the accessory dwelling units in Astoria, you should be looking at anywhere from like $1,900 to like $2,200 maybe for an ADU, but most likely you're going to end up very close to that $2,000 mark. So that gives you a bit of an idea of what to expect from overall rental income in Astoria, especially if you buy a duplex that has an ADU that is a basement that's been sort of finished out, has its own entrance exit, and you may decide to rent it out if you, of course, wanted to. That being said, I hope you really enjoyed this video because I had a lot of fun making it. And as just to reiterate what the data is telling us, it looks like the market is still going pretty strong, especially with the overall inventory that we're already seeing is available. We're not anywhere close to the end of 2024, and we've already surpassed that threshold of 2022. With that, guys, I'll see you guys next week. Thanks so much for tuning in. Bye-bye now.